Welcome back. This is part 3, market conditions. This is part 3 of the building your own trading strategy video series. So if you missed the first 2, just check them out. The whole video series is meant to help you to build your own strategy from the ground up and to really understand what it is to be trading, and not just when you come from Instagram, where people often give you the idea that trading is easy, for example, or that you can buy a Ferrari if you trade long enough, or that the whole I told you so profiles. That is not what trading is. So I hope I can help you to get that fundamental idea of what trading actually is. So let's jump into it. What do I mean with market conditions? Well, what market conditions will you be trading? To make it easy, let's say you are trading the daily time frame. Make sure, first of all, is this an uptrend, or are we in a downtrend, or aren't we trending at all, and are we in a consolidating, or in other words, sideways moving market? There are 3 things markets do: they go up, they go down, or they move sideways. It's just that easy. And of course, if you understand the whole principle of market direction, make sure that you have an idea on how you want to trade that. Me personally, I prefer to let's say, if I identify an uptrending market, this consolidation phase, I'm not interested, and this as well, not interested. But when we come back into supporting trend lines, for example, I'm calling that a pullback, and I would get into a trade, and I want to use the momentum that comes from these areas to get in a moving market. I'm not interested in the upper side of a channel when things go up, because of course you can place your short here and get some points out of it. It's up to everyone and their trading strategy, because you can do it. Also, if this would be the daily time frame and you zoom into the hourly time frame, maybe you can identify some trades within that range to be taking. But as long as you know in what direction the market is moving, trends do not break that easy. So using the momentum of the market is most of the time is in your favor. Sideways moving markets, some people stay away, and some people, they are looking specifically for sideways moving markets, because this is a great thing to be going short, going long, going short, going long, going short, going long, just as long as it's within a certain channel. It's easy to identify your stop, it's easy to identify your entry and your exit. Of course, you can go long, you can go short, as long as a certain market structure is up. Could be a thing as well. And then downways markets is kind of the same as an uptrending market, but when it moves down, then you get my point. As long as this is moving down, this is moving in a structure, for example, like this. And if we get a breakout over here and we break that previous resistance, then we get reversals in the market, and that's a different thing. But if the beginning and the end of a trend is interesting to know when that happens, and the end of a certain trend automatically means that we are starting a sideways moving market, or that we are reversing in the market, which could be the beginning of an interesting move back into a certain area. So market conditions, will you be able to identify them? Is very important. So let me get into what you should consider, because every video I want to close out with some questions for you to think about and to fill in for your own trading strategy. So do you need a trending market? That is one of the questions you should ask yourself. Think about, if you're a trend trader, of course you need a trending market. If you're a swing trader, you need a trending market. If you're a range trader or something like that, or maybe a scalper, you don't really need trending markets. You can also do your thing and use your system within a consolidating or sideways moving market. Another question: do you need a sideways moving market? Well, I've kind of answered that question. If your criteria fit that kind of a market condition, that's the thing to go. will you be looking for reversals in the market? You know, it's if you're looking for trending markets and you're ready to get in on a pullback and then ride in the direction of the trend, that is the thing you're looking for. Then is trending markets. If you are looking for reversals to get in at the beginning of a trend to be able to ride it as long as possible, a lot of people are looking for that, of course. But calling reversals is a different game than calling a trend. Reversals are, you know, it's kind of an art. Yeah, you know, you gotta know what's happening in the market. A trend line break is not necessarily a market reversal. It can also be a pause in the market. You know, so the uptrend is pausing for a minute, and after that we can continue to go up, or just in the previous picture, eventually it leads to a reversal, but more on a technical part on that in a later video. Will you be looking for pullbacks to jump in? I just said it. A reversal or a trending market are different things, and getting in on a pullback or getting in on a retest pullback, but that's in the opposite direction. It's a different situation. It's a different thing to well, let's just say to specialize in. Breakouts, like I said, an uptrending market turning into a sideways moving market. If the market breaks out either to the upside or the downside, that could be an entry in a certain strategy. So breakouts from consolidating markets often are things people look for. Or when you go into a correction, finally a breakout of the corrective structure, which could be an entry for you to because the markets really start moving. How will you use trend lines? Like I said, if trend lines is something that's pretty dominant in your strategy, make sure you understand that a trend line break doesn't necessarily mean a reversal or a shift in momentum, but it can be a clue, of course. And if you are seeing a trend line break and you are looking to get in for a profit for the retest, it's possible. It's all possible, but make sure what you think about and how you use trend lines. Also, trend lines on a bigger time frame are a totally different story than trend lines on a lower time frame, because it gets broken more often, etc., etc. So make sure you understand those different shifts between time frames and market conditions and how to use trend lines. But also support and resistance. Horizontal levels are often more you know, are tougher to break, and a retest says more than a retest of a trend line. So make sure you probably use them both, trend lines and support and resistance, but make sure you understand for yourself what that is in that market, because if a trend line breaks and you jump the gun for a reversal, I think you are in too early, especially on a bigger time frame, because support and resistance will first stop price in the move you are anticipating it will be making. What time frame will you use to start your technical analysis? Yes, very important question, because like I said, the bigger time frames tell a different story than the lower time frames. So make sure you know that. Do you want to know what's going on the weekly or the monthly, or do you just want to know what's going on today? You know, what was yesterday's high and low on a daily bar? If you're going to trade within that area, then you start your analysis from the dailies. A different kind of analysis, different thing, starting things from a bigger time frame than in a different way. What time frame will you use to identify entries? Yes, that's another one. If you do your analysis on a bigger time frame, probably you zoom in to a time frame where you finally will be making your decision on jumping into that trade and identifying an entry, identifying an exit, and identifying a profit target. Those decisions are often made on a lower time frame, but you do want to know where price on the bigger time frame is very likely to react. You don't want to jump into a trade that's in the middle of a range from the daily time frame, and then try to maximize the profits within that range, because that you're going to get a drawdown. That's one thing. That's one thing that could happen. Do you know an indicator that can add value to your strategy and the time frame you are trading? So are you using certain moving averages? How well are those moving averages respected on the certain time frame you're using? Again, 5-minute time frames and moving averages are different and less different, just let's say different than when you use those settings or indicators on a bigger time frame. Also, maybe you want to add an indicator that's showing momentum, or you want to add an indicator that is showing strength or weakness within the market, whatever. Make sure you understand that what indicator you want to use and what's it going to help you or do for you in your system. So that's it for part 3. Thanks for watching. See you in the next one, part 4, all about technical analysis. Thanks for watching.